Was last week's bullish candle a bear market killer? Or are we setting up a major stock market crash? And I got some stats to share with you guys in today's video, along with what history has to say about rallies like this. On Friday, we saw all the four indices in the green. Then we look at the sectors on Friday. Consumer cyclicals and technology by far outpacing everything else. But if we drop down right here and we look at the 1 week performance, last week was a very good week for the stock market. There was only one sector that was in the red for the week, and that was consumer defensives. Technology by far was outpacing everything else, and it was good to actually see financials participating as well. So we come over and look at the SPY real quick on the weekly chart, the S&P 500. Notice the MACD indicator on the weekly chart is below the zero line, trying to flatten out here just a bit. And if we go ahead and we measure from the low right up here to the high, notice we've rallied up roughly 14.5%. But let's not forget, right up here from all-time high down to the recent low, we actually dropped 21%. And a lot of people are going to classify a bear market as a drop of 20% or more. So technically, we're in a bear market. However, we are no longer down 20%. So let's travel back in history real quick, and let's look at the S&P 500 during the dot-com bubble burst. We can see the NASDAQ roughly dropped, an initial drop, roughly 30%. And then what do? We get a big bounce up here at about 22%. And everybody says, come on in, the water's warm. There's nothing to worry about. And as we look from that point on, from when we rallied back up down towards the ultimate low that we saw out here from the dot-com bubble burst, the market actually dropped another 41%. So now let's go ahead and look at the bear market back in 08-09 from the great financial crisis. Pay attention to the SPY right up here. The SPY drops right down here, right around 20%, actually 19.92%. And what's really suspicious is look how far we actually rally back up. We rally up 14.5%. Now, keep in mind when we talked about at the beginning of this video, how far has the S&P 500 already rallied back up? Right within that same ballpark. Now, if we scroll this chart down a little bit more, from when we rallied up 14.5%, look how much farther the S&P 500 dropped. It dropped another 53%. And this is what I'm warning you guys about. I don't want anybody to get complacent. Yes, the charts right now look like they could be constructive. So let's not get ahead of ourselves just yet that thinking all the bad is behind us. Because if we look at this first news article right here, what a plunge in shipping traffic from China says about tariffs, stocks, and the economy. Now, what this goes on to say is, there's a lot less goods being shipped over from China, and eventually our shelves are going to start to run dry. Now, to me, that doesn't sound so bullish. And if you guys thought things were bad during the pandemic, what is going to happen when the shelves go empty once again? Then we look at this right here, Jack in the Box closing up 200 locations. And think about this. If the economy is indeed having a soft landing, why is Jack in the Box basically cutting 200 of their stores? And what they go on to say is they're going to cut 200 of the underperforming locations, aiming to bolster its balance sheet amid declining consumer spending. And that's the key phrase that we really want to focus on. Consumers are starting to spend less. Then we look at the most recent investor sentiment survey. This week was quite actually bullish out here. For quite a while, we've been hanging down in the extreme fear in the middle of that area, or even down towards a lower level. And now we're in the middle of fear. Will this be the week where we actually see the fear and greed index go over to the neutral territory? We come over and look at the most recent investor sentiment survey. And this week, the bulls dropped down to 21.9. However, the bears got a little bit less bearish, coming in at 55.6. And we had more individuals jumping over into the neutral territory, which rose to 22.5. Now, as we come over and look at the first stat I have to share with you guys, and this is going to be brought to us by Wayne over on X. And what it basically goes on to say is, when the S&P 500 has had 4 out of the last 6 days be up greater than 0.5%, and 3 of those 6 days actually being up more than 1.5%. I want you guys to look at the stats 1 month, 3 month, 6 month, and even 12 months later. Very bullish stats. 1 month later, we're up 25 times, only down 6. 3 months later, we're up 22 times, only down 9. 6 months later, up 26 of those times, only down 5. And 1 year later, we've been up 30 times and only down 1. So even if the stock market is going to go a little bit lower, at least looking forward 1 year is a very, very bullish stat out here. Now let's talk about another bullish stat, and that's going to be the Zwag breadth thrust. And the NYSE just triggered a super Zwag as well, for significantly further than the threshold of the original signal. Now the S&P 500 returned more than 20% the following year, every prior thrust. So is this time going to be different? Is this current market environment with the tariffs, orange man in office, going to be enough to go ahead and bust this 1 year stat? Let me know what you guys think in the comment section down below. There's 3 amazing prop firm deals out there. Apex Trader Funding, 80% off all their valuation accounts, pass in 1 day. My Fund and Futures, you can get the starter plan for only $82. And Take Profit Trader, 30% off all evaluation fees, and best yet, no activation fee. So if you want to take advantage of these offers and help support the channel, use the links in the description box down below. Now I want to come over and take a look at the Dow Jones, which is a chart on the top, versus the transportation index. Notice the transportation index gave us a big heads up when the Dow was making a double top right up here at all-time highs. Now we're seeing the transportation index starting to come up, but if we look at that and compare that to the Dow, to me, it does not look like it's going up nearly as much. Then we come over and look at HYG versus SPY. HYG is the bottom chart, and that is high yield bonds. Now notice, what do we see taking place? We see high yield bonds on the move up higher. So does the smart money know something the rest of us doesn't? Or is this going to simply turn into a major trap? Now, another chart we want to keep an eye on is the spread between the 10 and the 2 year. Notice when the curve is steepening, that's when we're seeing all the pain in the stock market. Then this week, what do we see transpire? We saw this start to come back down, and what did stocks do? Stocks started to rally back up just a bit. But again, I'm a little bit worried that could this be nothing more than a bear market rally? Keep in mind, we have the next FOMC meeting coming in about 10 days. And if we scroll right on down, we can see that the market is still pricing in the Fed will do nothing at the May meeting. But the market is pricing in June, the Fed will be cutting rates. Now, is the market going to be setting up for a major disappointment? And if so, that could cause things to get extremely worse, especially if the tariff problem has not been solved by that point. Keep in mind, the 90-day pause is going to end, I think, sometime around June, July, somewhere in that ballpark. Now, coming back over and taking a look at the S&P 500 real quick, I want to jump over and take a look at the daily chart and notice, is this going to be a top 1, top 2, and turn into a double top pattern and then start to fall back down and end up being nothing more than a bear market rally like we've seen back in 08 and during the dot-com bubble burst? Or is this going to be an A to B equals C to D pattern where we already have the price target drawn out up here at 574.58? If we can breach above this high over here and we can hold it, which we already breached above it on Friday, can we hold it? That would be very constructive. The one thing I don't like is the fact we have 2 gaps from last week. On Wednesday, quite a large gap, but I will say on the daily chart, the MACD does look extremely strong. We did have some high volume areas on the profile we could focus on as well, about 560.38. And then up here towards this next zone, anywhere from 601 right up here to about 610. Now, diving over and taking a look at the 4-hour chart, and see the MACD indicator still has a nice cross, good separation of the 2 lines, about a 45-degree angle on the way up. I like the way that looks. The one thing I don't like is the gaps. Now, I'm not necessarily in the camp where I think both of the gaps get filled, but I would not be the slightest bit surprised if we do start to get a little bit of a pullback maybe this week, coming in and filling that gap from last Wednesday. Then we come over and look at the daily profiles. One of the areas I do want to watch, and we'll see if we can tag this level on Monday, right here about 548.17. This is going to be a minus development area, aka inefficiency in the market. We did have the point of control closing near the upper end of the range, but on the 30-minute chart, notice the MACD indicator is slightly crossed to the downside. That's just basically trying to work off some of the momentum from that push up that we've had. Then as we come over and look at the futures markets real quick, this is going to be a weekly volume profile on the 4-hour with 4-hour candles. And notice last Wednesday, we had that large gaping gap, but it also left behind a minus development area in this market. Now, as I look at this chart, we got to be fair over here. I like the gap down below us, but we also have to acknowledge that we do have multiple A to B equals C to D patterns on the way up. The first one is going to be this one right here, which we just validated on Friday. That completes about 57.21.5. Then we have a much larger ABC pattern that we've been talking about, and that would be something like this, the A to B leg. The BTC leg would be the corrective leg, and that completes at about 57.81 and 3/4. Now, we do have a couple untested point of controls up here as well. First one being 56.74. Then we have the composite point of control as well, somewhere in the ballpark of 58.15. Now, if we go over and we start looking at the weekly volume profile levels from last week, notice we have value area high up here about 55.62 and 1/4. We have the point of control at 54.97.75. Value area low is going to be down here at 53.11.75. Now, what I would love to see out here this week, and keep in mind, the market does not care about what Mike thinks. You guys have learned that during the live streams. However, if you guys don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. This week, we have more Take Profit Trader accounts to give away live on stream. But I'd love to see the market do a look above value area high and then start to come back down, because from that point on, I can target the point of control and then try to hold some runners out for filling the gap that we left out here last week, and even taking out value area low down here at 53.11. Now, as we come over and look at the daily chart with the 30-minute candles, notice here's the gap that we had from last Wednesday. And what did price do? We basically came right down here on Thursday, slightly got into the gap, and it said, no, thank you. Whoop. Big rocket ship on the way up. Now, something I talked about in Thursday's video was the fact that after we get a one directional move in the market and it's a larger ranging day, quite often, what do we see transpire? We get a D as in dog shaped profile. This is something else we were talking about live on stream on Friday, and that's exactly how it transpired. Now, something to note, we did not hit the P point on Friday. Anytime we do not hit the P point is nothing more than a pivot, floor trader pivot. It's a free indicator in a lot of platforms. So on Sunday night, when the market reopens, I'm going to be looking to see where the new P point is, and that's going to be one of the targets I'm going to be aiming for while I'm trading the Asia session or even during the live streams on Monday. Now, if you notice on Friday, we did close near value area high. And as I'm looking at this, value area high will be up here about 53.75. The point of control is going to be down here about 55.49.75, with value area low being 55.11.75. Now, if we can get above value area high and we start coming back down, I want to treat this as a look above and potential failure. I want to target the point of control, but then I also want to target that minus development area right here on the profile at about 55.24. Anything below that, I want to target value area low. Then I also want to have my attention to wherever the P point is going to be. Anything beyond those price points, I'd want to refer right back over here to the weekly volume profile levels. Now, next week, as we search for catalysts, come over and look at the economic calendar. On Monday, really no news to contend with. Then on Tuesday, we get the CS Composite S20 HPI. We also get the JOLTS job openings along with consumer confidence. Then we come over and look at Wednesday. Wednesday, what do we have on deck? ADP, non-farm employment change, advanced GDP at 8:30, Chicago PMI at 9:45, and we get the core PCE price index. So we're going to get a measure of inflation. Now, I don't think the inflation is hitting just yet from the tariffs, but I do think it will be coming sooner than later. Then let's not forget this week, we also have the BOJ. Then on Thursday, we have the weekly unemployment claims numbers coming out. We also get some ISM numbers coming out as well. Then we look on Friday. It's going to be a big one. We get the average hourly earnings. We get the non-farm employment change. We get the unemployment rate. Then at 10, we get factory orders. However, there's something else that could drive the markets next week, and that would be the fact that we have 40% of the S&P companies reporting next week. We got some big hitters out there. We got Visa, we have Starbucks, we have Snap, we have Amazon, Apple, Riot, Meta, Microsoft, Caterpillar, ADP, McDonald's. We have a lot of companies reporting earnings next week. And we come over and look at what the option market is pricing in terms of big movers out there. Spotify expected to move plus or minus 10.5%. S&P Global plus or minus 11.5%. Meta plus or minus 9.5%. Qualcomm 7.5%. Airbnb plus or minus 9%. Amazon plus or minus 8%. And Apple plus or minus right around 6%. So there's no doubt that next week could be action packed. Now we come over and look at the dollar index real quick. Dollar index on Friday had an up day, but I don't like the wick on the top of this candle. I don't like the way it's shaping up right here, right now. One thing positive would be the fact that MACD indicator is trying to get across to the upside. Then we come over and look at the precious metal gold. Gold right now on Friday had another down day. I think gold has put in a short-term high. And I think gold is trying to make its way over towards filling this gap right in the ballpark of 31.95. And that's also right near that 61.8 fib level at about 31.73. You can also see on the MACD indicator, we're trying to get a cross to the downside. However, it has not crossed over just yet. Then we come over and look at crude oil, just kind of chugging around, chopping around right down here. We've had that push down. We've come right back up, trying to retest this structure breakdown point. We're going to see, do we have a little bit more further upside testing to show, or is crude oil giving us a heads up that, hey, things are not fine out there. The economies are definitely slowing down. Then next, we come over and take a look at the QQQs real quick on the weekly chart. What do we got going on over here? You can see the anchor VWAP right up here from all-time highs. On Friday, we were able to get up and over that area. MACD indicator trying to firm up off this weekly chart, and we had a very bullish price candle out here. However, as we come over and look at the daily chart, we are above that anchor VWAP from all-time highs. We are above the anchor VWAP from the recent low in early April, and we have this A to B equals C to D pattern, which completes up here at 494.10. But as we start to get up in this area, this is exactly right where we were before we took the leg down previously. So do we get more negative news out there this week about tariffs or earnings or economic data that actually causes the market to go substantially lower? As we come over and look at the 4-hour chart, MACD indicator, good separation of the lines. And I really like it. The MACD indicator going up at about 45-degree angle. And notice we're getting very close right up here to fill in the gap, somewhere at about 478.46. Now that gap being filled also correlates with a high volume node out here on the volume profile as well. Then on the 30-minute chart, notice we basically have 3 consecutive gaps up. We had a gap on Tuesday. We had a larger gap on Wednesday. We had a gap on Thursday, and all 3 of those gaps are still open gaps. None of those gaps have been filled yet. The MACD indicator is slightly crossed to the downside. But basically, if we just simply consolidate up here at this area, that could be doing nothing more than having the MACD work off some of this momentum in the market, come down towards the zero line, and get ready for another leg higher. If the earnings come out and the market likes what it hears, we're going to see the markets going extremely higher. Keep in mind, recently Tesla had earnings coming out and the earnings were not that good. And look at what Tesla stock has done since earnings has come out. Tesla's right back up here towards a swing point. Even if the earnings do come out good, it does not mean they have to go up. Earnings came out bad for Tesla, the stock goes up. So it's going to be very important this week as 40% of the S&P 500 companies will be reporting. Now, as we come over and look at the NASDAQ and we look at the volume profile levels real quick, I'm going to zoom this out. Keep in mind, we have a couple critical levels. We have a minus development area with a gap from last week. We have an untested point of control below us at 17,250. We have another point of control up here, somewhere in the ballpark of 20,085. And then if we zoom this out a bit, we also have the composite point of control at about 20,621. Now, as we look at this chart, keep in mind, we've had this larger A to B equals C to D pattern in play. And that target is going to be all the way up here at 20,378. But now look, we have another A to B equals C to D pattern. From the moment price started getting above this swing point, that then validated this A to B leg, the B to C leg, and now we can project for where the D completion will come into play. Now, if you grab your Fibonacci extension tool, you simply click right here at the lower swing, you drag it right up here to this swing up here, and then you pull it down towards this lower swing. Look at where that price level completes. 20,045. What do we have right near it? We have an untested point of control right around that area. That looks where the market's trying to go. But again, we got to be mindful, because is the market going to do a little bit of look above and then start to come back down? And then that could maybe wash out some of the weaker longs, get a little bit of a push down, and then see if we want to firm right back up. Value area high is going to be 19,589. Point of control is going to be 19,258 and a half. And value area low will be down here about 18,375.50. Now this week, if we are breaching above value area high and we're holding above it, I do want to turn my attention towards these upper targets. The first one was this current A to B equals C to D pattern that's in play and that point of control. And then beyond that, I'd want to turn my attention towards that 20,378, which is the larger ABC pattern to the upside. Now, as we come over and we start looking at the daily volume profile levels on the 30-minute chart, notice on Friday, we did not hit the P point. So wherever the new floor trader pivots come into play on Sunday night or even into Monday is going to be a target I most certainly want to focus on. Now, we did form a D as in dog shape profile, which we talked about Thursday and Thursday night's 5 o'clock video. We also talked about it all day long during the live stream on Friday. Now, notice we did close right up here at the near the highs of the session. We actually closed above value area high, which comes in about 19,516 and a quarter. The point of control is down here about 19,352 and a quarter, and value area low is going to be about 19,316. So if we do start coming back down below value area high, we can target any of these high volume nodes, point of control, value area low, and then wherever the new pivot point is going to be. And then the pivot point is going to be somewhere within the range of what we saw on Friday, which is again going to make it a very high probability target for maybe an Asia session trade, London, or even early New York sessions. Now, before you buy your next prop firm challenge, be well aware of these fees. And to see what these fees are, watch this video right here.